Terraform Labs on Thursday said it has proposed 3 new emergency measures to save Luna and UST stablecoin. The company has proposed to burn all UST in the community pool, burn the remaining 371 million UST cross-chain on Ethereum, and stake 240 million Luna to protect from network governance attacks. Terra in a tweet thread outlined plans to prevent the severe dilution of Luna and restore the UST peg. The tweets also explained Do Kwon's 1164 proposal to expand the base pool size and burn UST. In fact, the proposal has received 450 million votes, with the majority in favor. Terraform Labs has started implementing the emergency measures to save Luna and repeg the UST. The company aims to burn over 1 billion UST in the community pool and burn the remaining 371 million UST cross-chain on Ethereum under its Agora proposal. The UST, which was on Ethereum as liquidity incentives, will be burned by Terraform Labs. It also says the company is currently exploring the best ways to increase the burn rate of the remainder of its UST holdings. With the staking of 240 million Luna, the company aims to strengthen Terra's economy and prevent governance attacks. The implementation of all 3 measures will help fix the on-chain swap spreads on the system, which will hopefully peg UST again. Meanwhile, Terra Analytics has revealed that the circulating supply of Luna increased by 4.355 billion on May 12. Moreover, more than 1 billion have been issued in the past 2 hours. While Treasury Secretary Janet Yellen recently criticized risks in Terra's UST stablecoin, the Securities and Exchange Commission, SEC, is rumored to have started an investigation against UST. The depeg of UST with the US dollar and Luna price falling in just 2 days may have brought the SEC into the scene. Moreover, the involvement of money managers and the possibility of a coordinated attack on the blockchain could also spur the SEC to investigate. In recent developments, a major disagreement has been brewing in the Terra Luna Classic, LUNC, community after a popular validator, Mr. Diamond Hands, strongly opposed a new governance proposal. In an ex-post, Mr. Diamond Hands, who runs LUNC, called the proposal one of the worst in recent times. He warned that it could have serious consequences for the network if approved. The governance proposal under criticism seeks to create a Terra Classic sub-DAO. This proposal hinges on plans to decentralize decision-making processes within the LUNC ecosystem. It also suggests creating a special team to respond to emergencies without waiting for full governance approval. The goal is to make decision-making faster and more efficient. However, this proposal has spurred mixed reactions among community members. Critics claim it could grant excessive, unchecked power to a select group and undermine the blockchain's decentralized ethos. Similarly, critics fear that bypassing traditional governance mechanisms could lead to decisions misaligned with the broader interests of the LUNC ecosystem. Notably, the proposal has garnered 39.41% approval, 7.95% opposition, and 25.47% votes marked as no with veto. The voter turnout is 28.95%, falling short of the 40% quorum required for passage. Mr. Diamond Hands has emerged as a vocal critic of the proposal. In an ex-post, he termed it a realistic effort to develop centralized legitimacy under the pretense of decentralization. Meanwhile, a LUNC Telegram group screenshot has added to the debate. In the chat, a community member said they might leave the blockchain if the proposal fails. Another user agreed, raising concerns that the issue could split the community. Speaking on the above, Mr. Diamond Hands pointed out that some supporters of the proposal have even threatened to leave if it does not pass. However, he firmly believes their departure would benefit the Terra Luna Classic network. Unfortunately, this dissension comes as the Terra Luna Classic, LUNC, community recently celebrated a major achievement. Reports show that the total number of LUNC tokens burned in the network has passed 400 billion. It is worth mentioning that despite market volatility and controversy, LUNC's price has stayed relatively stable, with no significant fluctuations observed. However, investors closely monitor the situation as substantial governance changes could influence market sentiment. As of this report, Terra Classic was trading at $0.00006361 increasing by 1.11% in the last 24 hours. IN-related news, CoinGape reported that the Terra Luna Classic community is considering reducing the 21-day waiting period for withdrawing staked LUNC. The International Monetary Fund, Terra USD/UST, which tracks the US dollar, and Terra KRW/KRT, which monitors the South Korean won, are two more Terra stablecoin denominations. By burning Luna, users mint new Terra, an algorithmic stablecoin or cryptocurrency that automatically tracks the price of other assets or currencies, can be paid for using Terra, an open-source blockchain payment platform. Users may instantaneously spend, save, trade, or exchange Terra stablecoins thanks to the Terra blockchain. Stablecoins are made via the Terra protocol and are intended to continuously follow the value of a fiat currency, which is a currency that is backed by the government, like the euro or the US dollar. Terra and Luna are the two cryptocurrency tokens that make up this system. Terra are stablecoins that are named after fiat currencies and follow their price. For example, the base Terra stablecoin, also known as Terra SDR or SDT, monitors the value of the special drawing rights issued by. On the other hand, Luna is utilized for mining and government. The staking token for the Terra system, Luna, takes on the volatility of the Terra stablecoin's prices. Users stake Luna to Terra blockchain miners, sometimes referred to as validators, who log and confirm transactions on the blockchain in exchange for payment in the form of transaction fees. Luna's value rises in tandem with Terra's utilization. Terra's main characteristics. In the quickly growing Asian e-commerce market, Terra seeks to increase value for consumers and efficiency for payment service providers. Terra challenges current retail payment apps with Cosmos blockchain technology. Terra circumvents the current disjointed payment infrastructure by offering a comprehensive end-to-end payment solution. Payment service companies might save hundreds of millions of dollars a year by utilizing Terra's technology. To handle the collateralizing procedures that support and protect the market stability of Terra's stablecoins, the Terra crypto network uses its native Luna currency as a governance token and utility. Terra's advantages and disadvantages. Advantages. Software developers can create their own protocols and dApps on top of Terra using the blockchain-agnostic development platform that is part of the Terra ecosystem. A number of currency-linked stablecoins are supported by the Terra protocol. Tokens from Terra Luna contribute to the stability of its stablecoin. To increase or decrease supply, it promotes trade between stablecoins and Luna. Terra unveiled Anchor, a lending and savings platform. Users can deposit money and earn interest on stablecoins using this protocol. Drawbacks. Ethereum and other significant cryptocurrency ventures are still ahead of Terra. Since its developers live in Korea, the majority of Bitcoin transactions involving Terra start there. Whether Terra-related currencies will gain traction elsewhere is too soon to say. Ethereum is more decentralized than Terra. Some blockchain purists could be put off by this. To be more specific, Terra is a payment system that is based on a blockchain. It was created by Terraform Labs, a South Korean company established in 2018 by Daniel Shin and Do Kwon. After working for Apple and Microsoft, Do Kwon started Anify, a firm that provided decentralized wireless mesh networking solutions. Shin co-founded the Korean e-commerce startup Tmon, formerly called Ticket Monster, and is the founder and CEO of Chai, an Asian payment technology company that is a Terra partner. Terra has 114 projects spanning DeFi, Web 3.0, and non-fungible tokens, NFTs, as part of its expanding crypto ecosystem, which aims to become a top e-commerce stablecoin payment and DeFi service provider. Among these projects are Anchor Protocol, a fixed-yield platform that offers easy access and borrowing yields. In South Korea, Chai is a payments app with more than 2 million users. Terra. The Terra blockchain serves as the foundation for this decentralized lottery platform. Mirror Protocol enables the development of synthetics or fungible assets that mimic the pricing of actual assets. Talus Protocol, an online marketplace enabling artists to provide their talents and sell their works. Vega Protocol, a derivatives trading and minting platform. The Terra protocol aims to keep the price of the Terra stablecoin stable by making sure that supply and demand are always balanced through the use of arbitrage. This is because the main value of stablecoins is derived from the stability of the price peg, theoretically avoiding the volatility typical of cryptocurrencies. Luna absorbs the volatility of the Terra stablecoin and acts as its variable balance. Imagine the entire Terra economy as being made up of a Terra pool and a Luna pool, which are utilized to modify the pricing through incentives for network users. This will help you grasp how Terra operates. Even after last year's crash, the developers are still putting in a lot of effort to keep the project running smoothly. The Terra Luna Classic developers presented a significant request to create and enhance liquid staking derivatives. According to a news story that surfaced on CoinGape a few weeks ago, the proposal states that in order to implement Quicksilver, an interchain liquid staking protocol for the Cosmos ecosystem, developers aim to modify the permitted interchain account host messages. This enables the Quicksilver chain to execute permitted messages and transparently create and manage accounts on the Terra Luna Classic chain. By enhancing network security and decentralization, it will also optimize liquidity and capital efficiency and permit interchain staking on any validators. Additionally, it eliminates the need for an unbonding period to pass before a position holder can sell the assets they have staked. You should be aware that the Terra Luna developers are still trying to improve the project in light of this. This is to let you know that there is still hope for Terra Luna. I think everything will be all right very soon. I also think Terra Luna's investment can make you wealthy. However, it all relies on how much you are prepared to hang on to, how much you expect from the market, and how much you are putting in Terra Luna Classic. Terra Luna's native token is called LUNC. The video will finish at this point. Remember to like, share, subscribe, and make prudent investments. Thank you.